Let's focus now on those Canadian banks. BMO and Scotiabank both beating third quarter estimates, and there were smaller than expected bad loan provisions. We're joined now by John Zechner, chairman and founder of Zechner Associates. John, thanks very much indeed for joining us. Happy Tuesday. Talk first about BMO, if you would. Over the past couple of years, there were worries about provisions for losses in the United States, but the stock jumping to a record high today.
Yeah, no, you're right, Andy. They'd missed, I think, like 6 quarters in a row about 2 years ago, and then they did the Bank of the West acquisition, and people were a little concerned with, can they grow the assets there? And obviously, when you saw the problems TD got into with U.S. acquisitions and a degree Royal, you sort of wondered what if there was going to be any problems there. But there was a very, very clean beat. I mean, it's interesting. I mean, I'm actually surprised how well both of the banks did today. But as you summed it up very well in your comments, Andy, I mean, the loan loss provisions are less than expected. They've dropped, which is a little surprising given the economic environment we appear to be going into and all the risks and everything, the fact that the actual loan losses. But I mean, as you mentioned, stocks are at record highs right now. The banks are at record highs, not only in stock prices, but also in valuations, which is a little frightening. So it'll unfold as though, how we do economically for the balance of the year. But no, capital markets were good, which is, you expect that when you have a move like this in the markets. Obviously, trading revenues were strong, lower loan loss provisions. I mean, if there's anything you could point at is a slight negative, on the BMO, it's just there's no loan growth, and which is not surprising. I mean, it's just in this environment, people aren't taking on money to spend. The consumer is getting a little more hamstrung, and companies with the changes in policies and tariffs and everything like that, we're not seeing much in capital expenditures or even employment gains when you look at the past couple of employment numbers, both sides of the border.
Certainly, as you say, the loan balance and deposits in the United States were down by 2% year over year. And just working, John, from the Canaccord report this morning, apparently the loan balance was up in Canada and the deposits edged up. But certainly, and you may have seen a different number. This is from the Canaccord P&C banking comments. But certainly down, as you say, in the United States. Scotiabank, talk about them if you would, John. What a fascinating story under Scott Thompson. Investors looking for a turnaround.
Yeah, they really are. And Scotia reminds me of National Bank or Commerce a couple of years ago. It's the discount to the group. It's the cheap, as you mentioned earlier, the way it's lagged the market overall. And obviously what hurt them for a long time, it was the Latin American exposure. I mean, they continued to take, growing losses there. They sort of taken that back a little bit. They did the Key Bank acquisition in the U.S., which, looks sort of somewhat timely. They've sort of become the sports bank in Canada, which has sort of helped their consumer exposure a little bit. And yeah, when I looked at it, sure, capital markets were good. Same as BMO, loan loss provisions basically dropped. Performing loans, were acting better. So they, clearly, the impact of tariffs so far in Canada, economically, has not been that big yet, despite the threats. And the issue has been, so far, is that about over 90% of the exports are still covered on the USMCA provisions, the USMCA compliant, so they're not impacted by the tariffs. So far, we're skating under that. Now we all know this is going to get renegotiated next year, and it's going to probably be renegotiated in a very tough way. Well, maybe Canada's on the back burner for now in terms of a reprieve on the tariff impacts, because these industrial stocks, the auto stocks, all of that got hit so hard earlier in the year, and we thought there'd be big provisions there, have mostly escaped these tariffs.
Before I forget, actually, we are talking to the Bank of Nova Scotia CEO, Scott Thompson, tomorrow on BNN Bloomberg. That's going to be in the 11 o'clock hour, 11 o'clock Eastern time. What bank stocks do you favor overall, John? Do you have a couple of favorites right now?
Yeah, the Scotia is our top relative weighting, and like I say, I liked it because the Key Bank acquisition gives some potential upside. It's the most inexpensive of the group, and it sort of positioned themselves better domestically as well. So I think all of that, gives you potential upside. BMO, I find we're not in right now. I just find it very expensive. They hit it out of the park, great on a good number. I just worried about the growth going forward. We still have Royal. Royal's the king. They continue to dominate the consumer market here in Canada. Valuation is at the high end, but they're not the most expensive right now. Actually, BMO was. We took profits in TD recently because it was so unloved, but it had a really great move. So we're out of that one. And Commerce continues to deliver, so that one's still in the portfolio as well.
John, any thoughts on Nvidia numbers tomorrow? Is this a stock that you're inclined to buy right now?
We're not buying it, Andy. We just haven't sold. We've held it for quite a while, and I've been reducing the weight in it. I don't. They're not going to miss. I mean, you know that almost 50% of their customers or of their sales are already been reported effectively from companies. When you look at the biggest customers, Alphabet, Meta, Microsoft, Amazon, they've all increased their spending dramatically. So they're going to hit the numbers. You're just going to get to a point where the monetization of AI is going to become a bigger question. And if it does, you're going to slow down in the spending. And once you slow down in the spending, the problem with Nvidia is going to be it's really not that expensive on a price earnings basis. It's very much on a price to sales basis because they have very high margins. I don't know how sustainable those margins are if growth slows down. It's a bit of the risk. And that card, I am reminded, and people say, oh, this is not 2000 all over again. It isn't. But, remember when the big king, what ran that is sort of the building of the internet infrastructure, basically laying down all the fiber and everything else. And Nortel, Cisco, Lucent, companies that aren't even around anymore Cisco is, dominated that JDS Uniphase.
Yes.
But then at a point, you realize you had built the capacity to do as much as you needed, and then to spend. And then once that dropped fairly dramatically, you realize the valuations are too high, the growth is not there, and earnings disappeared. So that's my concern a little bit. So we've been shifting more to software applications companies that can sort of use AI, implement it, add it to healthcare in areas like that, telecom stocks that I think may ultimately be better beneficiaries of what's happening in AI.
We're almost out of time, John, sorry. What about Adobe or ADBE or Salesforce CRM? Bloomberg reporting those stocks have suffered this year because people just don't know what AI will mean for software vendors like that.
Yeah, no, we've had a Salesforce recently. I mean, that's a bit of a chance that they're not going to monetize AI as quickly as everybody's expecting, and that is a risk. But that's sort of getting reflected in the multiples, cheaper than it has in a while. So we'll see what they do with Agentforce and what the delivery is and how well they can implement it. But I mean, Andy, there's no point to the spending on all these large language models and unless you can get to the inference stage and develop it and get some productivity from it. There has to be a payback on this at some point. If they don't deliver it, forget it. This whole thing is coming down. I believe it will happen, and it will happen. Those companies will monetize it. So we'll see what the next couple of quarters bring. So I'd be more inclined to be a buyer on the application software, depending on their positioning.
John, thank you very much indeed.
All right, Andy, thanks.
John Zechner, Chair and Founder at Zechner Associates.